You may have seen the headlines recently where a house in San Francisco's Noe Valley neighborhood was being bid on by a buyer who offered $400,000 over asking and was outbid by another buyer who offered pre-IPO stock of OpenAI instead. So today I want to dig in how AI is reshaping the real estate market in the Bay Area, both the good and the bad. When I read these articles, I want to know how it actually worked because the devil is in the details. In this video, I'm going to talk about some of the hype in the news, add a little information and context to the actual stories, and discuss my research into how it could actually work, and talk about how it might actually affect you, because in the end, we all want to know, what does this mean to me? You might be sick of hearing about AI. It's in the news a lot. I used AI tools in this research of this video, mostly Claude and Gemini. And AI is best used by experts in their field, and with over 20 years in real estate, I now consider myself an expert. I used AI for research and to shape the communication, but not to write this. If you think I got something wrong or have better information, let me know in the comment section. So I was kind of curious, where else is this happening? And after a little research, I found several articles about sellers trying to do exactly this. Storm Duncan, who's a partner in a tech investment firm, saw Anthropic stock for his $8 million Mill Valley home. He took the listing down after it went viral, though he said he had genuine engaged conversations with Anthropic shareholders, but no deal has closed. Vijay Chatta, a tech PR firm exec, priced a Healdsburg area home at $2.5 million, but said he'd take $2 million of it in Anthropic stock instead. As of the most recent coverage, he hadn't found a stock buyer. None of these deals has actually closed. Seems like Anthropic has a bit more interest than OpenAI. So all these make for great headlines because news wants to news, but what does it mean for the market? So here's a statistic from our own Compass. Mike Simonson, 144 San Francisco homes sold at least $1 million over asking in the first half of 2026 versus just 8 in the same period last year. I also think there might be some overbidding because those buyers are worried when these IPOs do happen, they might have even more competition. So I think the effect is real right now, but pretty selective. Worth noting too, some coverage frames this differently. Luxury up while affordable homes stay flat or soften. So how do you actually pay with pre-IPO stock? First off, I'd always want to know, how does a deal like this even work? I think the text from the buyer who lost that Noe Valley home was telling, in that his response was, that's not even money. So here's what I found out with a little bit of research on how it could actually work. For a seller to accept pre-IPO shares instead of cash, a few things have to line up. The buyer's company has to approve the transfer, since private stock carries board level restrictions. The two sides have to agree on a valuation for shares that don't trade on a public market. And the deal has to be structured to avoid security law issues. Escrow companies generally can't handle private securities directly, so these deals need a workaround, like a private agreement, a corporate attorney structuring the swap outside of escrow. Even then, the seller still owes capital gains on tax based on the stock's value at the time of the exchange, and they're left holding an illiquid asset that could lose value before any lockup period ends. The crucial part, selling triggers heavy taxes, and even after an IPO, there's a roughly 180-day lockup before you can sell public shares. The sellers who accept this as payment are really doing kind of an arbitrage plus some gambling that the shares appreciate. And it's only realistic for sellers who can afford to swap home equity for equity in another company. The fact is, it is complicated and something that isn't reported in these news stories. Kind of reminds me of a similar historic equivalent when pepper was once so rare and highly prized, it was traded on equal value as weight with gold. Think about that for a minute. Here's an article that I came across on Redfin. OpenAI Anthropic employees could buy nearly 1/3 of all homes in San Francisco with IPO earnings. If that wave of wealth hit the Bay Area all at once, that's a considerable impact. A third of inventory purchasable by people who can vastly outbid everyone else. Now, this article is just a piece on the actual amount of money that wealth could buy, and I emphasize could because this is just a hypothetical. I'm sure this ripples out to Silicon Valley, Marin, and possibly the East Bay, but I think it's a very limited set of homes that will benefit, and with a lot of caveats. As an anecdotal story, I did have a meeting with a couple who own a home near Lake Merritt in Oakland, and they told me that they hope this exact wealth wave enhances their home's value. So that's the perception effect showing up in real conversations. I think in their case, it's probably not likely. And of course, it's a hope that hasn't been proven out. So let's look at the other side of this, potential job loss. As of now, no one seems to think it's hitting the Bay Area directly in a big way. But I personally had a past client at Amazon who lost his job, not because AI took it, but because Amazon was pouring so much into data centers and other AI infrastructure that it cut back his department. Another downside effect of data centers alongside the massive electrical, water, and land consumption. On the numbers, Meta's Reality Labs cut at least 272 California workers. Meta laid off 8,000 people globally in April, 10% of its workforce. Pinterest is mid-restructuring. So there's the real irony. The same technology creating fortunes for a narrow slice of employees is displacing others in that same industry. And fewer tech jobs means less local spending on local services like non-luxury housing, restaurants, things like that. To be fair, some analysts think these numbers get overstated relative to the whole labor market, roughly 50,000 AI attributed cuts in 2025 against an otherwise tight labor market. I'd hold both at once and more modest than the scariest headlines suggest. However, in the Bay Area, where a lot of tech-related jobs exist, if people do start losing their jobs, it could start to have a negative impact on the other parts of the market as well. If people who own homes can't afford to keep them, decide to move away, or they just don't buy a home. Once again, we're kind of speculating on potential outcomes. The extraordinary concentrated wealth is reshaping who is competing to buy homes, and at the same time, that same technology is quietly costing some people their jobs. So is this a lasting structural shift or a wealth and hype bubble riding on IPOs that haven't happened yet? Honestly, too early to say. If you are searching for a home in San Francisco, then it's possible you may run up against competition that has an asset no one else has. This is concentrated in a very fortunate few. I think there may be more of an actual shift happening after these IPOs happen. That's been proven to be the case in the past. However, this time it is a pretty considerable amount of money happening in the IPOs. We're talking hundreds of billions and possibly $1 trillion of newly created wealth. If you are an OpenAI or Anthropic employee looking for a home, I'd love to talk to you. If you've had any direct experience with this, I'd love to hear about it. The devil's in the details. My name is Philip Cake. I'm with Compass Real Estate here in the East Bay. And if you found this video informative, I hope you'll share it. I always appreciate hearing your comments. And if you'd like to see more from this channel, you can hit the subscribe button. Thanks for watching, and I'll see you on the next one.